Okay. Okay. Good afternoon, everyone. I hope I'm audible. If I am, please, I would appreciate if anyone can just give me a quick yes. Okay. All right. I think I see thumbs up right there. Confirmation. All right. We are going to jump right into our session today. So before that, I would like to welcome everyone again to our special webinar today. And today we're celebrating special indeed. We are celebrating International Women's Day. And today we'll be focusing on focusing on financial aspects of this uh, wonderful International Women's Day event, so to speak. Will be Our subject for discussion today would actually be empowering women, building financial independence through pensions. And today we'll be covering an array of topics essentially designed to help women in the working industry build solid financial foundation so that once they retire, they are nice, comfortable. Because we all know that working in this environment of ours is actually quite stressful. I'm your host. My name is Pelumi Shotubo, and I will be taking us through the session today. I will be in the background while having the wonderful speakers give us their insights and their perspectives on how you can actually achieve financial independence through the use of your pensions. Once again, welcome. This session is powered by Leadway Pensure PFA. And once again, we welcome all of you to this special session. Um, so as previously mentioned, we'll be going over some special insights and perspectives on how to build independence through pensions. And without further ado, I'm going to go ahead and just give a quick overview of our magnificent speakers today. Today we have on the call two wonderful women who actually work at Leadway Pensure as well. So we have Olaronke Uju, and we have Oluwatomisi Michael Oseni. So I'll start by describing Tomisi's background. I'll just give a big brief background for both speakers. So Tomisi is a certified service professional. She's a she's a trainer and a coach. She specializes in customer service and experience, business development, and client retention. She has about 12 years of experience in the pension industry. She obviously currently works at Leadway Pensure, where she drives strategy she enhances profitability, customer loyalty, and business efficiency. Her expertise spans customer engagement, change management, and she has several soft skills which are absolutely necessary in today's society. She has leadership and development skills, and she also has special training in improving service delivery and revenue growth, with a result-driven mindset and a deep understanding of customers' needs. She's committed to helping organizations strengthen their market presence, improve retention and strategies, and maximize business opportunities. And on the other end of the spectrum, we have Olaronke Ujo. Olaronke Temitope Ujo, colloquially known as Iya Oyo, by the way. Ronke is a seasoned finance professional with over 15 years of experience in the pension industry. She holds a BSc in economics from Olabisi Obasanjo University, and she's a fellow of the Institute of Chartered Accountants in Nigeria. She currently works as the portfolio manager in the asset management department at Leadway Pensure. She brings a wealth of experience and investment strategy, portfolio management, financial planning, and a deep understanding of the pension sector. You know that the individuals that we have today are actually going to be able to provide wonderful insights into our topic today. So, without further ado, let's go ahead and get started. Once again, I'd like to welcome also our special audience. Thank you for joining us today. We hope that this is going to be a wonderful session for you, obviously. And please, if you have any questions, please feel free to put it right down in the chat box. We'll be picking up on one or two of your questions as we go along today and answer them as we go on. But also rest assured that we have our customer service experts on the call as well. So if you have any questions, they can also respond to your questions while we are engaged in some of our talking points. And obviously, if we can, we'll go ahead and squeeze in some of those questions in the session as well. We'll jump right into it. Again, our topic today is empowering women, building financial independence through pensions. And we'll go right into it because we're delving into some of the topics that concern women, particularly in the workspace. And I'll start off by engaging Tomisin, Tomisin. So, Tomisi, would you please give us a little bit of insights as to some of the unique requirements that women need in the workspace, and how career patterns are affected by are affected for women, particularly when it comes to saving, given that there are some special requirements for women that do not apply to men. When I speak in terms of like pregnancy, would you please give us a little bit of insight as to some of the unique requirements for women in the workspace?
Thank you to our audience. Thanks for joining us for today. So, in respect to the question about the pattern that affects women when it comes to caregiving, when it comes to caregiving, depending on the kind of organization you work with. However, for private sector, based on caregiving, you're allowed to go for maternity leave for 12 weeks, while for state, it's 6 months. And depending on an organization, it depends on the weeks or months they tend to give an individual that has to go for caregiving. However, some women would like to request for more months just to take care of themselves and their children. So for us to know the patterns that affect women when they go for caregiving, for those that decide to go more than the specified weeks or months, one is reduction in pension contribution. Because once you decide to go for more months or more weeks with respect to caregiving, your pension contribution will have to stop because your employer will not remit for you for the period you requested for an additional month. And this tends to reduce your retirement saving account balance. Then we also have eligibility. It tends to affect eligibility when it comes to payment because there are some kind of payment that involve that you must have actually worked for maybe 5 years when it comes to some kind of payment before you can actually access your benefit like mortgage or equity. So this can affect any woman that goes on caregiving and has to spend like a year more just to take care of their baby. Likewise, we also have delay in career progress. Due to the gap that you created or a vacuum you created because of the caregiving, it tends to affect the career growth. Probably there's a particular period you need to attain before you need to get to a particular position. But because of the period you have to go for caregiving, this is being affected. However, for us to plan ahead with respect to caregiving as a woman, I will advise we should key in it to additional voluntary contribution. Even though your employer is remitting for you as the 18%, it's also very important as individual or as a woman to also key into additional voluntary contribution. Because if you want to have a better life at retirement and have a financial security, additional voluntary contribution is very important for everybody because with additional voluntary contribution, it tends to help you boost your retirement saving account, not just for the women going for caregiving alone, but also to have a better and a financial secured life at retirement. Then also diversification of our portfolio. That is very important. You need to invest into different kind of investment portfolio. Thank God we have our portfolio guru, Olarunke, which she's going to actually enlighten us on the kind of investment we should key into, such as mutual fund, we have equity, depending on our risk appetite. This makes it very easy and seamless for us to key into. So with these different alternatives I've actually mentioned, this will not create the vacuum for this caregiving period a woman is going. Thank you very much, Pelumi.
Thank you very much, Thomasine. That is actually wonderful. And not only did you provide very, very good insight as to some of the challenges that women actually face in the workspace. I mean, they do have to take breaks, and that actually can affect their retirement savings, just as you mentioned. And not only do you provide some of the examples of how this can actually affect women, but you also provided strategies in terms of, diversifying portfolios and actually, keying into the additional voluntary contribution, or AVs as we normally call it here at Lead with Pension. These are absolutely wonderful, wonderful strategies in terms of how women can actually better position themselves for financial growth. But let's perhaps engage Ronke now. In terms of growth, Ronke, what would you say would be a good way to leverage, your pension plan, your RSA plan, so that you are well positioned to build long-term wealth over time? And what are some of the investment options that people should focus on?
Pelumi, a pension plan, as we all know, is an employee benefit that requires an employer and employee contributes to a pool of funds set aside for workers' retirement benefits. Through pension plan, we can benefit from power of compounding. Power of compounding essentially is an act of adding interest on interest. That is, the amount of money you contribute can generate earnings from both the initial principal and the accrued earnings from the preceding compounding periods. For example, let's say 100,000 naira, we invest it in FGN bond, 5 years tenure. At the end of the 5 years, the face value will be repaid. But before there will be interest repayments on a periodic basis, every 6 months. That interest payment, as it comes, we reinvest. So the reinvested interest too will generate earnings. The earnings on the reinvested interest too will be reinvested, and that will generate earnings. On and on. This can lead to exponential growth of wealth over time. And this is one key advantage of pension plan. We need to know that the more frequently and for a longer period of time we contribute, the greater the potential for compound interest to grow wealth over time. So investment options, we have various investment options, which include equity investment. Equity investment is money invested in a company by purchasing the shares of the company in the stock market. It yields return through dividend income or capital appreciation. When we buy shares of a company, we essentially become part owner of that company, and our investment grows as the company succeeds. But we need to note that and always remember that stock market is volatile, and the value of stock can go up and as well down, and this can have impact on our returns. We also, another investment option is bond. Bond is a fixed income instrument or investment product where we lend money to governments or companies at a certain interest rate for an amount of time. In addition to the face value repayments at maturity, we get interest on a periodic basis. It can be quarterly or semi-annually. And we have various types of them. We have FGN bond, we have corporate bond, we have state government bond. There is also treasury bills. Treasury bills is a short-term instruments issued on behalf of federal government at a discount, and at maturity you get paid the par value. So the difference between the face value and the discount value is the return on that investment. And we said it's a short-term instrument because the tenure is between 91 to 365 days. Similar to T-bills is commercial paper. Commercial paper is also a short-term debt instrument issued by companies at a discount, but at maturity, you get the face value, get the par value back. We can also invest in that. We can do fixed deposit. Fixed deposit is a tenor investment where a specified amount is invested at an agreed rate and tenor. We can also do mutual fund. That's another investment option, mutual fund. Mutual fund is an investment vehicle where made up of fund pulled from various investors for the purpose of investing in securities such as bonds, stock, money market instruments, and similar assets. And there is also real estate investment. Real estate investment is investing in land, buildings, or residential apartments. We can also do private equity. Private equity is termed, and real estate term it as alternative investment. Private equity is investment partnership, mostly involving institutional investors and wealthy individuals, while they buy shares or stake ownership in a private limited company that is not listed in the stock market for public trading. So these are some of the investment options that are available that we can invest in. Thank you.
Thank you Thank you very much, Runke. You certainly have given us quite a wealth of investment outlets for that one can key into to make sure that you're sorry. Sorry, you've given us quite a wealth of investment option to make sure that you actually build a solid foundation in terms of your preparation for your retirement. And one thing that I actually noticed from what you mentioned is the power of compounding, and I think that is actually a fantastic point to make in terms of how well and quickly you can actually build wealth over time based on how you allocate your funds. And again, wonderful job in telling us the different investment outlets. And that essentially tells us that you can actually diversify your portfolio. Perhaps you can give us just a brief indication as to why diversification is important when it comes to making sure that their portfolios are well positioned for growth.
Okay, thank you. Diversification is a strategy that involves spreading investment across various financial instruments, industries, and similar categories to reduce risks. By diversifying pension fund portfolio, the portfolio is protected from significant losses, as the poor performance of some investments can be offset by the better performance of other investments. Diversification is a critical component of reaching long-term financial goal while minimizing risks. That's why diversification is very important, so that it will help to reduce and minimize our risks. Thank you, Pelumi.
Thank you very much. And I can't, I think Runke makes a very fantastic point when it comes to diversification, because just apologies for that. Pardon me, ladies and gentlemen. Like I was saying, diversification is actually a very, very key component when it comes to the, growing your wealth because once you diversify, if one asset is just like what Ronke mentioned, if one type of investment isn't doing well, there's a tendency that another investment might be doing well, which gives you that element of growth regardless of which is performing, and you could be in a situation where they are both performing and actually helps build your portfolio. At this point, I'd like to once again just remind individuals on the call that Leadway Venture has all the different RSAs, just like in the industry. Obviously, we have the different RSAs, and we also have the micro pension, and we also there's the Fund 6 about Fund 6, which is a Sharia compliant fund, which is mainly for individuals who are looking to invest in certain types of instruments which are not conventional instruments. That's actually also a very, very it's a growing fund. And also to mention our additional voluntary contribution as well. Additional voluntary contribution is a fantastic way for you to build on what you already have in your RSA, right? You can put in a little bit extra, just like Tomisi mentioned earlier, so that you are actually able to build your retirement savings even better than you would with just your RSA. And don't forget, please, if you have any questions, please feel free to put it in the comment box. I will also have a 2-minute survey for our customers, for our participants and customers. It's in the chat box, so please, when you have the moment, please help in filling that survey out so we can be better informed as to how we're doing. But we'll jump right back into the conversation, and I'll go once again to Tomisi. Tomisi, perhaps you could shed a little bit of light as to some of the conceptions that are out and about pension benefits and how you can avoid some really, really expensive mistakes that seems to be more common than more people know.
Thank you, Pelumi. When it comes to misconception about pension benefits, it's not just common to the women alone. It seems it's a general misconception among the gender. And due to those reasons, this actually causes financial issue in future or at retirement when planning for retirement. So what are these common misconceptions? One of it is a whole lot of people feel retirement is still far. I can wait. I still have 30 years or 25 years. I still have 40 years to go before retiring. So why should I start planning for retirement now? But the answer is no. You need to start planning for retirement from the first day you get your appointment letter. Because before you know it, the clock is ticking. And before you realize what is happening, retirement is knocking at your door. So it's very important for us to start contributing now, no matter how little your salary may be or how little your intake or take home may be. You need to start planning for retirement. You need to start contributing. You need to pay into additional voluntary contribution. You can decide to start with 5,000 naira, 10,000 naira. And before you know it, like Ronke talked about compounding interest, it actually works that way. The more you save, before you realize it, you discover that you really actually contributed so much beyond your own imagination. Then another misconception we do have is for women is, I have a rich spouse. My spouse will always be there to take care of us or to take care of me at retirement. What if the otherwise happens, inevitable happens to your spouse, or maybe due to job loss by your spouse, or there's a divorce that occurs? What is going to be your fate then? So when it comes to retirement, I always tell people, let it be individualized. Don't say you and your spouse. Fine, what God has joined together, let no man put asunder. But when it comes to retirement, we need to take some precaution just to prepare for the future, because you don't know what the future has for us. You don't know what tomorrow may be. So even though you have a very rich spouse like Dangote or Taidola, you still need to plan for your retirement no matter what. Then another misconception is that I earn little. So because of that, I'm still waiting for when I'll get a job and I'll be earning more. Please don't waste it when you get a bigger job. You should start little. When you start little, then you'll also be faithful when you have the big chunk of salary. So please start now. Like a little drop of water makes an ocean. So it's very important to start saving now, no matter how little or how small it may be. Then another misconception is it not pension? I'm not interested. Whatever they like, let them do. No, you shouldn't just say it's not just pension. You need to be aware. You need to be enlightened about what happens in the pension industry. Because the more enlightened you are, the more it becomes easy for you to make the right decision when it's time to retire. The more it allows you to prepare ahead for your dream kind of retirement. And when we talk about retirement is a period we need to enjoy ourselves because you've worked for a long period of time. It's not the time you need to be so bad or worried because you didn't plan. So it's always very important with plan. Then the final one is a whole lot of people don't take track of their pension contribution. They feel it's the business of my HR, it's the business of my admin. If they like, let them know remit. No, you need to take time some. Maybe you could make it a quarterly thing or you could make it a yearly activity whereby you check through your statement of accounts, look at the contribution made from you from the period you started working to that very present date to know if there's no missing period. Because when it's time for you to access your retirement benefits and you discover that there are some error, it tends to prolong the processing of your retirement benefits. Like I have the case of one of my retirees, which I've always been telling her to always track her pension contribution. But she's always telling me, I have a whole lot of time, don't worry. It's not retirement. When we get there, we'll cross the road. It happens that when we check that contribution, we discover that our contribution has some missing period. And now that she's retired, we need to go back to our employer to start tracking when our payslip was deducted, this month was not remitted. And because of that, it's create a little space back for her for the processing of her retirement. Whereas by now, she's meant to be receiving her pension. If she has actually checked her contribution coming in there, and now she just be relaxing. So it's very important for us as individuals, not just as women alone, to always take track of our pension contribution. So for us to avoid this costly mistake, I want us to get ourselves acquainted with what is happening in the pension industry. One, we need to also key into additional voluntary contribution. Please pardon me for mentioning this additional voluntary contribution. I just don't know why I keep talking about additional voluntary contribution because I have a whole lot of customers that have testimony to share when it comes to additional voluntary contribution because it tends to help you boost your retirement saving balance at retirement. For instance, if you have a colleague that is not doing additional voluntary contribution and you're on the same level, and when it's time for retirement, you discover that whatever lump sum you are getting at retirement will be higher than your colleague that felt me dropping one little amount of money as voluntary contribution is not necessary. And this will help you to cover a whole lot of space and meet a lot of needs. Because at retirement, your health needs to be taken care of. And when it comes to health, it's very, very expensive, most especially for we women. We need to prepare ahead for that time so that we don't fall victim of looking for one child or one children to take care of us or begging one person to look out for us. So please, we need to be financially aware. We need to stay informed so that we can have a better life at retirement, so that we can be a bubbling woman at retirement and a lovely and caring and looking refreshed woman when retired. Thank you very much, Pelumi.
Thank you very much, Tobisi. Yes, absolutely, I agree. And they need to look as fresh as you do today, I think. And you actually make a very, very good point when it comes to um, uh, um, you make a very good point when it comes to people putting off their retirement savings. People entitlement. So people tend to put off their retirement savings for some time down the line. They always keep thinking that their retirement is not imminent. They always keep thinking that, oh, I have enough time to save for retirement. And by the time they actually start thinking about it, it becomes very late for them to actually put the sufficient amount of resources down so that they can retire comfortably. And that is actually a challenge that is faced by both women, men and women. And I think you make a very good point in actually bringing it to the forefront and making sure that people actually understand that it's something that they need to think about very carefully. But that is actually a general point that actually applies, that I believe applies to both men and women. But perhaps you can shed a little bit of light on some challenges that are particular to women. So what are some of the challenges or barriers that women may face when it comes to savings for their retirement, and what are your suggestions as to how they can be taken care of or addressed?
Okay, thank you very much, Kwelumi. When it comes to gender-specific challenges women face, to me, I'll say it's not a challenge, though. You could also use that challenge to actually overcome a whole lot of things. One is career break that we spoke about at the beginning of the program. For the caregiving aspect, like I said, our employer has made it flexible for all. So if you know you want to go for caregiving, you could decide to take the 3 months or 12 weeks for the private sector and make use of it to take care of your child or make necessary arrangements. However, if you decide to take more months, like we mentioned earlier, it's very important for us to key into voluntary contribution and diversification of our investments so that this can actually help cover for the period requested for, aside from the normal caregiving period. Then another challenge faced by we women is when it comes to depending on our spouse, which I mentioned earlier. Some women, or most women, tends to depend on their spouse. And as a result of this issue, maybe something inevitable occurs, and this tends to affect them at retirement because they felt, oh, my husband is there, he earns much, so he's going to provide for us when we retire. And along the line, is it that maybe the spouse lost his job, or probably the inevitable occurs, or maybe divorce issue happened. And because of that, the dream kind of life the woman has actually planned or assumed she's going to be living may not come in place then. Then another challenge we face is when it comes to retirement benefits. For women, there's this actuarial assumption that states that the female lives longer than the male. As a result of this, when it comes to retirement benefits, it's very, very important for a woman to have sufficient retirement benefits to be able to meet up with the long lifespan that women do have, so that they can actually meet up with their dream kind of life at retirement. Then another challenge is the health challenge. At old age, the women tend to have more health expenses they need to meet. And because of that, it's very, very advisable for us as a woman to key into health insurance so that we can prepare ahead of time that, oh, when I'm retired, I can actually have an health cover to meet up with my needs when it comes to my health and the likes, and this can also be met. Then another thing is lack of financial literacy and investments. And thank God for this program we're having. My colleague, Olarunke, our portfolio guru, has actually expanded the kind of investment we can put our money into, aside our pension contribution, that can actually help us to have a better life at retirement. So it's very important for us to be aware. Awareness is very important, just like we are doing a Leadway Pension PFA, to get every one of us aware of what we need to know so that we can have a better life at retirement. So we need to get ourselves acquainted. Then another thing I also want to mention is that for entrepreneurs, we discovered that a lot of entrepreneurs feel pension is just for those in access service alone. It's a no. We also have what we call micro pension that caters for those who are into businesses for entrepreneurs. So as an entrepreneur, you are not left out. You're also a woman, and you're also going to retire one day. You are not going to live forever as a young person. So you can also key into our micro pension, whereby you can contribute pension at ease. You can decide to make it monthly or weekly or daily. And the beautiful thing about this micro pension is that you can decide to access 40% of your contribution, and the remaining 60% will be set aside at retirement. So please, for our entrepreneur, don't feel we are letting you out of this enjoyment or this pension we have. It's both for both those in active service and for those who are entrepreneurs. So we advise you, if you've not key into what we call micro pension, so please key into it. It's very, very flexible. And with this, you could also plan for a better life at retirement. Thank you very much, Pelumi.
Thank you very much, Tumisi. Again, wonderful points in terms of making sure that you are aware. I think that is a very, very key point. You have to make sure that you are aware of what is actually happening in the industry and what's actually happening with your RSA. And we'll speak a little bit more about that. There were one or two questions on the chat, and I just wanted to address one or two of them, although they actually have been answered. One individual asked, good afternoon, everyone. Please, when can I access my retirement funds with Leadway Pensure? So it's not just unique to Leadway Pensure. I think the answer for that has already been provided as well. So the answer for that has already been provided. You actually have you are eligible to access your pension once you clock the age of 50, and there are other requirements. There are other circumstances that make you eligible to tap into your retirement savings account. My own suggestion, if you do not have a need to go into your retirement savings accounts, just leave it. If you have the absolute need to go into it, to tap into it, then you can retrieve it. But otherwise, my own suggestion would be to make sure that you just leave it and make sure that it builds over time, because once again, the power of compounding is actually very, very important. And another individual had asked, so what they asked was that for fixed deposit, what is the minimum duration and rate applicable? And there was also a response to this. The rates do vary from institution to institution, and likewise, duration also varies. So, and it's a function of the rate in a given period, and also a volume of what you are looking to invest. So if you have let's say 100,000 naira, it would be different. The rate would be different from, let's say you have a 1 million naira. But they do vary, but there are attractive means of actually saving for your retirement through these outlets. Another question was, when can I access my AVC and what percentage will I be entitled to? So your AVC, you can actually access up to 50% of your AVC after you've it has to sit in the account for a certain period of time, but after you've put it in, you can access about 50% of your AVC, but that is always available to you to access. But we'll jump right back into the question. Points that Tumisi made was to make sure that we are aware of circumstances surrounding our savings, our retirement savings, and also circumstances regarding the environment in which we operate. So perhaps, Ronke, you can give us a little bit of insight as to how women can equip themselves with knowledge and make sure that they are informed about their own financial health and their own financial prosperity.
Thank you, Pelumi. We can equip ourselves by educating ourselves through self-study. Let's read market news, publications. Let's get updated with the happenings in the economy and in pension industry. We can also seek guidance from professional experts. By ourselves, we can start creating budgets, setting financial goals, building savings and investment habits, and also embracing entrepreneurship. This can help us gain necessary knowledge and skill to make informed decisions about our pension and overall financial wealth. Thank you.
Thank you very much, Ronke. Yeah, absolutely. Gaining knowledge about your your environment is actually very important, and there are various ways to actually gain that knowledge. The National Bureau of Statistics publishes information that have to do with the general economy, and our RSA holders can actually use that to gauge the type what may happen with their own investments. So, for instance, has an impact as to the rate of return that you can get, right? The higher the inflation, the more people demand for a better rate of return so that they can actually cover the increase in prices that one may experience. However, let's delve further in. Are there any investment options that women can also apply outside of their RSCs to build further on their retirement savings?
Yes, there are investment options. Whether we have RSA accounts or we don't have RSA accounts, we can invest. As mentioned before, okay, so we have low risk investments, the likes of fixed deposit, commercial paper, bond, treasury bills, and some mutual funds. They are low risk. We can invest whether we have our RSA accounts or not. For those of us that have high risk tolerance, that we have high risk appetite, we can invest in equity. I mentioned that equity is a little volatile compared to the low risk, the fixed income instrument. So we can invest in equity too. And we can do this through brokerage firms that invest in equity, and all the likes of FGN, treasury bills, fixed deposits, we can do it through banks. And mutual fund investment houses, asset management company can do that one. So whether we have RSA or not, we can invest. Thank you.
Thank you very much, Ronke. Without missing a beat, I'd like to once again ask some follow-up questions, and this would actually apply to both speakers. So, what advice would you give to female entrepreneurs or freelancers who do not have access to the structured pension plan? So typically you have, when you're working for an organization contributes a certain proportion of your retirement, and you yourself have to contribute a certain proportion of your remunerations towards your retirement as well. And I think Tomisin actually mentioned this earlier, where she recognized all of the entrepreneurs in the house. So perhaps you guys can give us just some more information as to advice that freelancers and entrepreneurs have when it comes to savings outside of the structured plan. Perhaps we can start with Tomisin.
Thank you, Pelumi. For our freelancers and entrepreneurs, like I said, that they are not let out of the pension industry. And that's why the micro pension is being open for them to be able to key into that. So like I said, they can also prepare for retirement. They are not let out. So they can decide the amount they want to be contributing either weekly or monthly. And if they feel they want to increase it based on the kind of dream kind of life they want for retirement. Like our Leadway Pension PFA, we have what we call Sure Cow. With our Sure Cow, you can determine the dream kind of retirement you want. So if you want the luxury kind of retirement, you will put in the amount you want on the Sure Cow, and the Sure Cow will tell you what you need to contribute either monthly or weekly. With that, as an entrepreneur, a freelancer, you can decide to increase your daily contribution or your monthly contribution based on the kind of life you want to live. And anytime you need any fund, probably for emergency to raise or get more, maybe you want to increase your capital to enlarge your business, you could always apply for 40% of this, your total contribution, which make it flexible for you because you're an entrepreneur, because we understand your kind of and your nature of job. So you can always get 40% out of your total contribution, while the remaining 60% will be kept to retirement. So you can decide to increase it quarterly, weekly, depending on the kind of incomes you have, so you are not left out. So please don't let anybody push you to the back and feel that pension is just strictly for those in active service. It is for both entrepreneurs, freelancers, and for those in active service. So please, if you've not keyed into micro pension as an entrepreneur, I would advise you to please take the opportunity now. Now is the time. Please do not wait for tomorrow. Thank you very much.
Thank you very much, Tony C. And perhaps we'll channel the same question to Ronke, see what she has to say.
Yes, thank you, Pelumi. As mentioned by Tosin, micropension is the fund designed for individuals, self-employed individuals. And just like other RSA funds, the money is saved, it's a well-regulated industry. You have access to professional management of your funds, risk diversification, then benefits of compound interest. You enjoy all this. Then I also encourage, in addition to that, we can save and invest. Savings, let's have savings and investment culture. This can help build a strong foundation for financial independence and success. Thank you.
Thank you. Yes, absolutely. It's actually very important to, plan outside your regular RSAs, just like both speakers have mentioned. And let's just quickly take a question. We are coming towards the end of the session, but I just want to quickly take a question that I think is actually quite, can actually shed a little bit of light. So I hope they don't mind me putting their, mentioning their name. So Bolanle Oke asked, when you talk about investment diversification, does it mean that apart from the pension contribution, one can bring lump sum to leadway pension to make investments like treasury bills? So the answer to that is, once you bring in any additional contributions, right, what we do is we invest those contributions much like we would invest your regular invest funds for your regular RSA. As you may well do, the different RSAs have different risk profile. So RSA 1, for instance, is more of a risk-taking meaning that the higher the risk, the higher the reward, but it is still risky. So there might be fluctuations in RSA Fund 1, while you have RSA Fund 2, which is more stable, and RSA Fund 3, which is absolutely stable, and then RSA Fund 4, which is essentially expected to bring you consistent income without taking in any fluctuations. So once you bring in your additional contributions, we manage those additional contributions much like we would any other RSA fund, right? And we are always looking to make sure that we are delivering the best return for our customers, while also mitigating the risk associated with each and every one of those investments. So again, please continue to put in your questions. A lot of the questions that you guys are asking are being answered on the chat. So if you have any questions, please feel free to just go ahead and put your questions in. And also, please don't forget to fill in the survey. We have a survey up for you, so please, it's an opportunity for you to tell us how we're doing. So please, if you have a moment, please just go ahead and fill out that survey. And we'll go right into the final question of the day. Again, this will be open to both speakers. So we've learned a lot today. We've learned a lot about compounding. We've learned about some of the challenges that women face, and how women can actually prepare for these challenges. Perhaps now, based on what has been discussed today, our speakers can give us their one takeaway. What is the one thing that you both believe that anyone who attended this webinar today should take away from this discussion today? Perhaps we'll start with Tomisi again, and then we'll move to Ronke.
Thank you, Pelumi. Thank you to our viewers. So in conclusion, I would like to say women or men can overcome retirement challenge by just being proactive when it comes to saving. Ensure you invest wisely and also try to get yourself acquainted with the pension policy because knowledge is power. Once you have the knowledge to what you need to know when it comes to pension, when it's time to retire, it's going to be very seamless. So I want to say that please, we need to start early. Don't wait till next year or next month or next week before you start saving. You need to start now. Now is the time, and we need to save consistently and stay informed. This will actually help us to have the kind of dream life we want at retirement and also help us with financial security.
Thank you very much, Oluwatomisin. And I will now once again ask the same of Ronke. Ronke, what would you say that both women and men on this call should take away from the call?
Yeah, thank you, Pelumi, and thank you everyone for joining. I want us to remember always that earnings do not guarantee financial security. Oh, I'm earning big, my earnings is high, my salary is fat, therefore I have financial security. No. Financial security is achieved by protecting your earnings. And how do we protect our earnings? We can protect our earnings by making smart financial decisions, like reducing our debt, cutting unnecessary spending or expense, building a strong emergency savings. Then we can also do insurance. Yes, insurance too is key. Then contributing more to retirement savings. Contributing more to our retirement savings and invest. Thank you and God bless.
Thank you very much, Ronke. Thank you very much, Oluwatomisin. So I just before we wrap up, I want to just, we have a few more minutes, and I want to make sure that we're able to address some of the questions that have popped up here on the chat. One of the questions is, how do I know the RSA fund plan that I am on? Is it possible to switch? That is a very good question, and the answer to that is yes, you can switch. And if you want to know the fund plan that you're on, Leadway Pension actually has a WhatsApp AI that can answer a lot of questions that has to do with your pension plan. It's called Lisa, and our customer service reps will put in the number in the chat so that you can put it right into your WhatsApp. You just message it, and it'll provide you all the information. It can get you your pension pin. It can tell you exactly what plan that you're on. It can tell you your RSA balance. It has a wealth of information, and you can actually do a lot using that AI as well. And when it comes to changing your RSA, you can also change your RSA. So just like I mentioned, everyone knows that there are different RSAs. There's the RSA Fund 1, 2, 3, 4, 5, and 6. And if you are in an RSA at a certain point and you feel like you can perform, or you want a better performance by shifting to another RSA, you can always do that. Once again, our customer service, our wonderful customer service representatives can assist with that. You only have to fill out a very, very a form which is very, very brief. It's not something that's too complex, and you can switch from one fund to another. Let me quickly take another question here. Another question, what is the minimum amount to start with? I assume that they're talking about you know, if you're in a pension, if you have a pension plan, with a micro pension plan, you can put in any amount to start. You can put in any amount so long as you're contributing towards your retirement. It's very, very important for you to actually put that into consideration, that you're actually contributing towards your retirement. So any amount will do. Your questions, please. If you have additional questions, we are short on time already. So I want to encourage you that if you have any questions, please go ahead and continue to engage our customer service, our representatives on the chat. They are answering your questions. So if you feel free to reach out to Leadway Pension representatives as well if you have any questions as well. I think the Lisa app also has a phone number that you can call at any time, and we'll be able to address any issues that you may have. So at this point, I would like to thank our wonderful speakers, Olaronke Uju and Oluwatomisi Michael Hussaini. Thank you very much for your wonderful insights, and thank you each and every one of you for joining the Leadway Pensure webinar today. We hope that this was an insightful session for you, and we hope that if anything, you picked up at least one point that you can apply towards your saving, be it that you are a woman or a man alike. But especially for the women, I hope that they were able to take away very, very key points that would help them in building that financial freedom once they retire. Once again, thank you everyone for joining us today. Do enjoy the rest of the day, and we'll see you at our next webinar. Thank you, and bye-bye.
Thank you, Pelumi. Thank you to our lovely viewers, and happy International Day ahead. Thank you. Enjoy the rest of your day. Bye.